My old man's a dustman, he wears a dustman's hat. Works all day, works all night, and that's as good as that. Well. We're going to discuss work ethics today. Ooh.
Matron, take them away.
And a warm welcome to one and all for this coffee with Scruff. Now what we're going to talk about, because obviously most people will come here thinking, oh, going to show me how to trade, going to show me how to make loads of money, it's not going to cost me anything, and I'm going to be rich.
Fuck no!
Wrong. Completely wrong. You want something in this world, you work for it. You think you're going to get it free? No. You think you're going to learn something free? It's going to be worth the sum total you pay for it. Fuck all. So where's all this come from? Well, Coffee with Scruff is really just my thoughts across a weekend while I'm just taking a bit of time out. And what I like to do is I read through some of the comments. Some of them kind of fire me up in a good way. Some of them fire me up in a bad way. It depends on how they're wrote.
You know, you're a classic example of the inverse ratio between the size of the mouth and the size of the brain.
And I like to try and give you some of my life experiences. Now, what I'm going to do in this one is I'm going to talk about why you actually fail in trading. And I'm going to go through this with greater detail in the Zoom call on Monday night with the Scruffy squad. Scruffy squad's changed somewhat over the last 2 years. It started off just being bunch of guys rambling on, and it's now become a good platform in order to learn the craft, if that's what you want. And it's split in two parts. The lower levels kind of support what I do. The higher levels support yourself in the form of education. And I take all the time in the world to give you all the tools that you need. But the one tool I can't do is you.
What?
You know, I go by a very famous quote, and you'll hear me say it time and time again. I've said it before, and I'll probably say it again. Know thyself, it is the beginning of wisdom. Because it's only you know what you are and who you are. And there are certain categories of people out there. There are those who can and there are those who can't for whatever reason. Now, sometimes they can't because they haven't had the education they need. And sometimes they can't because they're not willing to put the work in. They want everybody to do it for you. Now, I'm going to show you a comment. Now, I've bleeped the name out because I don't want to embarrass the lad. But at the same time, when you send something like that to somebody like me, I am the worst person to send it to. I am the absolute worst. And I'll kind of show you. Now, I get lots of comments, you know, not as many as I would like. But this one here, send me some money.
Cheeky fuckers.
Why? Why should I send you some money? You're going to send me some. You know, you can go out and build wealth from very little. And I know this because I've done it. You know, and I've done it from nothing. When I lost my factory, I didn't even have £5 in my pocket. Nothing. The receivers took everything. You go from millionaires row to zero row in a week. You know what it is to have zero, because nobody will speak to you. Nobody wants anything to do with you. You can't buy your way out of trouble. You can't do anything. You have two choices. You sit in the corner and cry, or you roll your sleeves up and you get on with it and you start crawling forward. And I did the same thing when I was 11 years old. And that's what I'm going to touch on. And I try to be as diplomatic as I can, because my first instinct is not the best one. But you can go into a prop firm, and just for argument's sake, I'm going to show you one. We'll just fire this up, and it's the fivers, and I have built a fund from using this, and I'm going to show you how. So if you come down here here is thing, $39 you can get into. But, and go one further than that, you can go to Black Bull markets. Black Bull markets, and let me pull this down for you. Okay, so you find this, like I say, there is links below. You can start from next to nothing. You could put $10 in this and trade micro lots of 10p and build up. Okay, you've got the leverage to do it. Don't need to use the leverage. Leverage is buying power, not position power. You've got very tight spreads, but you can start with zip, very little. Okay, now if you've got money to use an internet phone or a laptop, put clothes on your back, go out and have a coffee, you could miss out 2-3 coffees and put the money in here. And then what will that bring you? Well, something that I'm going to touch on, which is this, because we all saw me start live, 118 quid, built it up, trading some shares, used it to buy a prop fund, and then used the prop fund to put into Vanguard. That Vanguard account is now worth 5.5 grand. All right, and as we go through this, I'll show you where that came from. So when I see that, I sort of think, really? But then the next part is this. I haven't been working for 4 years. Send me 50 quid. Fuck's sake. If you can't find a job in 4 years, son, you really need to give yourself a shake. At 11 years old, I wanted some ice skating boots. Parents couldn't afford them because I grew up in the 70s when there really was fuck all. Nothing. You know, you think the world today is hard? You want to try living in the 70s and the early 80s. That was really hard. There was no technology around. There was no handouts. There was nothing. You wanted it, you work for it. It's that simple. There used to be merry hell on with riots and bloody fights in the street with miners and all sorts when jobs were being taken away. There were tough times. You've got no idea what it's like. The only thing that's horrible today is the strange society and the progressive politics of, oh, what's my pronoun and everything like that. Oh, I'm so offended.
Lovely weather we're having.
Oh, so you think climate change is lovely? Are you pro anti climate change?
Just get a grip, world. Get a grip. And not only get a grip, understand that fellow man does owe you nothing. You want it in this world, you get it yourself. The way I work in this world is, if you put the work in, and I see you putting the work in, I'll help you. I'll walk that path with you. If I see you as a freeloader and just give me, I don't want anything to do with you. Nothing. Because I literally got no time for people like that. I used to have people come to my factory looking for a job. They were feckin' useless. Absolutely useless at what they did. But they had the ethic that they wanted to work. If I see that in somebody, I'll teach them and I'll show them, because every one of us, all of us, has the ability to be better than what we are. Now, some of us are not as most intelligent as others, so they'll use the hands. But that person who used the hands has a skill set the intelligent person doesn't have. So they are no worse or no better than anybody else. So when I see a snooty-nosed doctor turning their nose at somebody because they think they're educated, can they put a nail in the wall properly? No, they can't. Why? Because they haven't got that skill set. So if your skill set is lower than somebody else's, it doesn't make you any less a person. And when it comes to trading, it's the same principle. You don't need a fancy system. You just need a system. And I'll show you one. I'll show you the easiest system in the world. And it comes back down to know thyself. Now, there's a little thing that I tell my kids all the time. You know, and well, maybe you think it's a bit hard, maybe you think it's a bit not, but this is where the words come from at the end of every video. Do what you love and the money will follow. Now, I've got 4 children. Each one of them has a different path in life, you know, but they all have the same moral attitude. And that's because I've drilled it into them through the years. If you want to be a bin man, be a bin man. Not for any other reason than that you love it. Now, if you love it, be the best bin man. It's not the best job in the world, but you love it. So excel at it. Be good at it. And if you're good at it, you'll be recognised. And then you'll be asked to become bin man supervisor. And you get a pay rise. So the money has followed something that you love. Now, when you become bin man supervisor, excel at being bin man supervisor. And then you become bin man manager. And you get a pay rise. See where I'm going with this? Because once you've become the manager, you excel at being the manager. You love the job. You love the craft. The craft is a bin man. The job is now managing that bin man. Be the best. Then you become area manager. And then from area manager, you can get up onto directorship boards and things like that. And all the while, money is coming with you. Now, I've done that my entire life. You know, if I'm going to do something, I'm going to be good at it. And I'm not going to be good at it because I'm told to do it. I'm going to be good at it because I love it. Never do something that you don't like. If it stresses you out and you can't handle it, then you have to either adapt it to a way that you love it or don't do it at all. Now, when it comes to trading, most people sort of think it's all down in the low time frames. And they love the action, but they can't deal with the stress. Well, there's the problem to start with. You're not doing the job. The job is always in the high time frames. The low time frames are just for execution. It's just part and parcel of what we do. When you get your knowledge, that comes from higher up. Now, where's the money side of it come? Well, if you follow the process, the money will naturally follow by building your account up. And that's kind of why I showed you the Vanguard at the start of this, because I kind of wanted to show you what can be done. Now, if I was to sort of boil this down into basics, trading ain't difficult. You've really got 2 choices. It's going up, it's going down, because the third one is it's going nowhere. You ain't trading anyway, doing nothing. Right? So you've got a choice. It's either going up or it's going down. So you need to put a slight edge in your favour. You know, it doesn't have to be much, but if you start at 50-50, and that includes the way you place your stop against your target. I genuinely detest all of this 1-to-3 ratios, and I'll kind of explain why I detest it. It makes you force a trade, because you'll place your stops in too tight, and it'll make your targets too wide, because there's nothing worse than actually calling the trade right, seeing it move, maybe it's 2 times in your favour, but you've been conditioned into 3-to-1, turns round and then hits the stop. But if you start in the middle, 1-to-1, and say you've got 100 stop and 100 target just for easy figures, you're already at 50%, because it's either going to hit that stop or it's going to hit that target. 50%. So you need to start adding little layers of percentages in your favour. And that's what technical analysis should be all about. Not X marks the spot. Now, this is something I figured out a long time ago. You can start planning things and working it out. And I touched on me being 11 and ice boots. I didn't quite finish the story, so I'll kind of finish that now. What happened was, in the 70s when I was growing up, there was literally very little. You know, it was really tough. My parents couldn't afford them. They were Bauer hockey boots that I wanted, and they were very expensive at the time. And I used to love ice hockey and sort of going to the ice rink, that sort of thing. And I was only 11 years old, you know. And as a kid, you don't really understand that, well, money is tight, you know. You just see other kids with things and you want them and you don't understand why. But my gran sat me down and told me if you want something, you work for it. And if you save your money, good things will come to you. But you have to put the work in. And I thought about this, and I didn't really understand how or why. And she said, look, weed my garden, and I'll give you £1. Now I needed to save £100, which is a lot of money. Certainly at that time. You know, it was a lot of money at the time. I can't remember how much the boots were. They're about 80 quid or something like that. But it was a lot of money. You know, it was at a time when sort of my Star Wars figures that I love to collect, and I'm trying to get back the older versions now. It doesn't bother me if the retros sort of repositioned, but I'm collecting them up there. They were 99p each. Okay, at the time. About 20 quid each now. So inflation's gone up a bit. Anyway, weeded the garden, made a complete arse of it. Still got paid because I tried. But then I weeded next door's garden. Got £1 for that as well. Then I started knocking on doors, washing cars. 50p here, £1 there, and 25p. Got myself a little paper round. You know, 11-year-old, got fucking paper round. You know, pushing papers through a door. Got a couple of quid there. And across the summer, I earned enough to buy those boots. So that settled in my head. If I do this, I get that, and the only person who can do it is me. So fast forward through your trading careers, your own personal careers. You've always got to remember, the only person that can do anything is you. You know, somebody can show you what to do, they can give you their knowledge, but you have to do it. And then if you complain because you can't do it, the only person that you blame is you. It's why I often say, when you look in the mirror, you'll see your best teacher. You'll also see your best critic. You know, you think, oh, I can't do this, I can't do this. A lot of the time, it's not your technical ability. It's the fact you're gambling. Too many markets, too many positions at one time, too big a position because of greed, and it smacks you in the arse. So let me quickly show you something. If I just flick this over.
Well, we're waiting.
Okay, and I'll come back to this in a moment, but I just want to show you this to start with. So if I just pull this up into shot. What we're looking at here is one of my standard layouts for a Forex chart. Now, if I look at an hourly chart, now I like to look at an hourly chart because it gives you enough time to see what's going on, but it also is fast enough you can trade it. Now, I know a lot of people are going to go, oh no, I need to be on the minute chart. The action's all on the minute chart. Is it? Is it really? Well, what if we was looking at a monthly chart? Is there not the same amount of action on a monthly chart? No, a monthly chart's too slow. Depends on how you're looking at it. Now, if I'm looking at a market, I look at two constants in the market first. Two. Okay. And when I look at this, I see two constants. Now, a constant is a level. Doesn't matter whether it's sort of an entry exit level like this one, a support and resistance, or a key fib. Doesn't really matter. They are constant, because if I look at a minute chart, those levels are in the exact same place on a monthly chart. They don't change. It's a constant through all of the time frames. Likewise, the price. The price is a constant. Some people think it's a variable. It's not. It's a constant, because it doesn't matter what time frame you're looking at. That price level will be identical through them all. A variable is your indicator, because if I drop a Bollinger Band on this, it'll be completely different on the hourly to the monthly to the minute. Likewise, RSIs and sort of moving averages, etc. So they vary through the time frames, which become a problem because you don't know how many eyes is looking at them at any one time. You know, you're going to have scalpers, but you don't know if they're scalping an hourly chart, a 15-minute, a 5, a 2, a 3, even a 1 or a tick. You don't know. But the one thing I do know is It's not big money, because big money doesn't scalp. Not in that sense. So where would the eyes be worth looking at? Higher up. So you look at your 4 hours in your dailies if you want to be day trading. So if the indicators that you want to be paying attention to are that way up. Now you can have the simplest system in the world, and I'm going to show you one. It's one moving average, constants, and a little bit of thought. And here we go. So you can have an hourly chart. Check this at the top of each other. Have it on set and forget. All you need to do, get an indicator, which can be a moving average, and it doesn't matter what that moving average is. Now there are key moving averages: 200, 50, 100, 20, 5, 8. All of them are key. All right. You can say, right, for the last 200 hours, this market has done X. That's what this does. So we'll flick that on, and I'm just going to use it as an example. There is a 200 moving average. As long as that price is above that moving average, you are only buying. That's all you're doing. So you're looking at the hour as your anchor. In other words, somewhere to set your stall out. And you go, right, for this hour, it's above the moving average, I'm just going to buy it. So all you would do at this point is you would just drop this down and you buy from level to level. Doesn't matter about this moving average anymore because it's on a different time frame. It's varied. So if you flick that back, this has been buying for a long time. And as you can see, the pullbacks to the reds are pretty shallow. But look how they respect these levels that are put in. You know, so if you come into the market here and you go, right, I'm only going to buy, well, you put an order here, you get out here. I still think I'm going to buy it. You put an order here, you get out here. You put an order here, you get out here. And you stick between the two solid levels. So you have a solid level here and a solid level there, and you move from level to level each time till it gets to the top of the range. Then you make a decision as to whether you're going to carry on or not. Very simple. If you come into the market here and it's broke through the range, as you see, you do the same process. You buy it here, you get out here. You're still happy with it, you buy it here, you get out at the solid. Simple. Let it come back on itself, do the same process. Down, in here, out there, in here, out there. This, forget about it, let it relax. Oh, it's red, it's red, it's red, it's red. Oh, it's green. Okay, I can start buying it again now. Right, I'll put an order there, I'm getting out here. It would have done it, even in that volatility. Coming down, buy, out, buy, out. And you do it all the way to there. The worst you would have had to stretch is that lot. This ain't difficult, guys. This is the most simplest system in the world. You're just using a barometer of a 200 moving average. If it's above it, I'm buying it. If it's below it, I'm selling it. And I'm moving from one section to the next section inside a trading arena. And as long as it stays inside them two lines, you just buy it. Simple. It's a variation on box, but it's a simple system. But you can't do that because you don't think it's that simple. You think trading is this mystical thing. It's not. You know, I mean, in that equation, stops on one side of the solid line. The higher it goes up, the bigger that stop has to be, but you are just going from section to section to section. Nice and simple. But that raises a question. What's the stop's job? Because we're talking about work ethics. So the stop's job for this work is one thing. It's got knack all to do with that trade. Nothing. Just one job. Protect the account. If you think that stop's too wide, you don't take that trade. It's that simple. Then if you enter a low down in the range, brilliant. Where you go. Stops doing its job still, protects the account, and you ask yourself one question: can I afford it? And if you say no, I can't afford it, you either don't take the trade or you half the position. This ain't difficult, but you look for the magic pill. You look for the wonder system that's going to be right all the time. You look for free handouts because you think somebody has the keys and you're entitled to it. Well, here's a wake-up call for you. You're entitled to fuck all.
Jesus Christ, dude.
You're entitled to what you put the work into. Simple stuff. Now, if I come back to this, I'm going to show you where I'm up to and how that Vanguard was built. This is why every month, without fail, I take out $750.
I love it when a plan comes together.
$750, 242 bonus. Why are these little bits there? Well, because sometimes I just like to give myself a treat. But I put a set amount into Vanguard every month from my trading accounts. Set amount. And that set amount has now given me the ability to have that. Now I'm going to show you how this is built up as well, just to give you something else. I've broke it up in between a pension fund and an ISA fund now, because again, it's built up. So if I look at the pension fund to start with, the reason why I've built it up into this now is because I can get tax relief off it. So for every penny I put in, I get a little bit of tax relief in the form of a credit. So that builds up that side quite nicely. Now, I also use it as an ISA. So I split the investment between the two now. And this builds up. And then if we put it into here, across this section here. And the way that this is working is very simple. In fact, there's some cash there. So I'll show you how to invest, because I'm going to drop some more into this. And we'll see. So that's a good exercise for today. So we'll widen this out so you can see it. So what we're looking at this moment, I use a Life Strategy 60. That's because I want a happy medium. It's not going to light the world on fire. It's just going to plod along because it's between bonds and shares. So it's not overly risky. So it just ticks along. We have the world, basically buy the haystack, not the needle. Emerging markets, that's my sort of risky. They can be quite volatile and they can give good returns. So I'm willing to put a little bit into that. And then the rest of it I put into the S&P 500 because it's a steady growth. Ticks along all the time. And we've got a bit of cash left over from this month, which is 309. So you can easily invest it into something. So if I click invest, it's telling me there I've got 108 quid available of cash that I can use. So it's obviously still buying units at this moment. So we've got £100 to use. All we're going to do is we're going to invest it into a product. You come down into here and you go, right, okay, what am I going to invest it into? Well, flick this up. If I go onto the blended funds, I'm going to drop 100 quid into here because it's safe. You know, I can just drop £100 into there and it'll invest. Now, let's just say I didn't want to do that. I can come down into the equity funds and I can start having a look to see which ones I like. And there is hundreds of them. Well, there's actually 86. I'll show you which ones they are actually. But they go down there. But bear with me a second. So what I'm going to do is put the blended in. I'm just going to actually buy 100 quid of that. So we'll put £100 into there. It's working out the costs for me. Just click that to see that I like it. Payment method is we're just going to use the available cash. Dead simple. Submit. That's it. So we've bought that investment for £100. They'll send me an acknowledgement. Very, very simple. But if you want to work out what funds they have, if you come here, it'll start showing you what there is. You've got ready-made portfolios, or you build your own. So if you go build your own, what you can do, you can look at your past performance. There's 70 results. You can start looking through all of this lot. Now you can work out your risk level. If you want very low risk, these here, it's just as well putting it in a bank, to be honest. But if you go level 4, 5 and 6, that'll bring down this to 59 results. You can have the type of markets that you like. You can have active management, or you can have index trackers. Personally, I like index trackers because it just plods along what the index is doing rather than letting somebody manage it for you, because a lot of them are not that good, to be honest. You can either have distribution or accumulation. Difference between them is if you get your dividends, it'll either be distributed to yourself as an income or an accumulation where it's put back into the fund. I would just put it back into the fund at this moment in time. And then what you're left with is 48 results. Now you can decide, how am I going to invest this? Well, you can look at the performances. So there's not that many to look through. You can see whether they're good, bad, or indifferent. Sort of like that one, for argument's sake, it hasn't made any money for a long time. 3 years. So that's something you can look at. But you can say, right, well, I want to invest in a global market, which is the best of this. You've got 14 to choose from. Well, that one's been around a little while. It's only lost money once. This one's just starting. This one hasn't made money. That one's just starting, so you can delete that one. That's lost money a couple of times. That's only lost once, but it's made good returns. So that 20% that it lost here, but everybody lost money then, because that's Corona. You just look to see which one, like that's terrible. That's not very good. There's a good market, really good market. Ticking along just nice. There's a nice market. Yes, it lost money there, but look, it made it back. Made it back. Not so good. That's a good market. Easy, easy. And then you just drop down on your investments, just like so. Look at your performance to see what's happening. And from its start, moving up, up, up. I'm quite happy with this is return over the period of time. And that's it. So, not really sure where I was going with today. Apart from that, if you've got a work ethic and you're willing to put the work in, the rewards are definitely there. Now, there are a couple of ways you can do it. I need to start looking more at investing than trading for the years to come. And set and forgets is a way forward for me. For no other reason than I've got an account big enough that I don't have to sit in front of the screen anymore. I can just chug along. Now that gives me a lot of freedom. Now that freedom can be spent other ways. And this is where the Scruffy squad's going to change year going forward. I want to spend more time in there. I kind of dedicate a day to it as it is. But I want to spend more time, make the Discord more fluid. And the way I'll do that is by putting work in. So I'll get up early. I'll do the news announcement. I'll do the breakdown for the guys. I'll then trade it for the guys. But then I'll spend time with Juan. Is that not the right way to do things? Or should I just say, okay guys, I've got no money. Give me money. Give me money. Why?
Who'd be stupid enough to do that?
Justify, stupid.
No. If you want it, you work for it. And every penny I earn, I'll work for it. Can you say the same? Be interested in your thoughts. But as always, I'm very easy found. Find all my contact details in the comments. If you are interested in sort of the platforms that I use, and the only platforms that you see on this channel are what I use personally. Right? If I don't use them personally, I won't endorse them. I trade for the fivers and I trade directly for them. That's why I bring it up, because that's my account that you see. I have money in Vanguard. It's my money. It's what you see. I have money in IG. That's what you see. I can't be any fairer than that. So as always, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.